Hi, and today is June 5, 2025, 6:37 a.m. Japan time. Let's start by reviewing yesterday's Nikkei market. The Nikkei closed at 37747 yen, up about 0.8% from the previous day. Trading volume was not huge, but over 2,000 stocks rose, so overall it felt like a strong day. However, overnight the market pulled back, closing around 37540 yen. In the US, the ADP employment report and ISM data were weaker than expected. So recession fears have come back a little. That's how the market ended. On the currency side, the yen has been getting stronger, hovering around 142 yen. In Japan's bond market, 30-year government bond yield staying high at around 2.92%. In the US, stocks index did not move much. The S&P closed at 597 point, almost unchanged. However, bond yield in the US moved differently from Japan. 30-year US Treasury yield dropped to 4.88%, about 0.1% lower than the day before. The MOVE index is around 96.97, showing the US bond volatility has settled a bit. It looks like US Treasuries are being bought, while Japan's yields are staying high. This feels different from the previous trend. Bitcoin is moving sideways. As for the VIX, it's at 17.61 in the US market and around 23 in Japan's equity market. Both are relatively calm. I still think the US market is in a better position, while Japan looks weak, especially with high bond yield and slowing corporate earnings. And the future markets will seem capped during night trading, which is a bit worrying. Also, today Japan has a 13-year bond auction. Recently, the 14-year bond auction had a very low bid to cover ratio, so people are watching this auction closely. If today's 30-year auction does not go well, and its yields rise even higher, and the Japan-US yield gap will shrink, this would make the yen stronger and could hurt the stock market. If US yield are far and Japanese yield rise, it could signal more risk for Japan. In the past, and it felt like the US equity market and chain race, but now Japan seems more vulnerable with rising yield and weak EPS momentum. Also, recently there have been some reports about the BOJ reducing JGB purchases. If that really happens, it could push it higher. And there are also concerns about the Minister for Finance cutting bond insurance if GDP shrink, but make it seems more focused on the BOJ auctions. If yield continue to rise, the yen could get even stronger, and that will be negative factor for Japanese stock. High yield could also trigger a yen carry trade winding, which is another risk. Until now, the market moved mainly on global risk like geopolitical and tariffs, but maybe it's time to pay more attention to domestic factor in Japan. That's all for today. If you like my contents, please follow me. Think of it as a long put position on my information flow. See you tomorrow.